Thanks. Hi, everyone. I'm Janine Hirt, the Ecosystem Director at Innovate Finance, the UK-based industry body for global fintech. I'm really excited to have this panel today because we have 5 of the biggest banks here to talk about how they're adjusting to the changing and evolving financial services landscape, and also how they're responding to our new, more digital-savvy consumer base. So it's a pleasure for me to introduce our panelists today. We have Raman Bhatia, Head of Digital UK and Europe for HSBC Banking and Wealth Management. Benoit Legrand, Global Head of FinTech at ING. Kirsty Rutter, MD and Chief Innovation Officer UK at Barclays. Gustavo Vinacua, Founder at BBVA Innovation Centers. And Gilad Amir, Head of FinTech Discovery at Lloyds Banking Group. So thank you all very much for joining us. So to begin with, we all know that banks are operating in a very different world today than they were 10 years ago, 5 years ago, even 2 years ago. The number of branch visits in the UK fell from 476 million in 2011 to 278 million in 2016. And over the same time period, the number of mobile banking logins increased from 169 million to 1,191 million. We also have PSD2 coming up. So as you've heard yesterday, there is a lot of talk about how this will impact the banking sector. Some say this is really a threat to banks or the threat of commoditization towards incumbent banks, but others say this is a huge opportunity for banks to develop a much closer relationship with their customers and develop that customer loyalty by offering more curated programs and curated opportunities for their clients. So I think to kick things off, if we could just talk a little bit about how you're approaching as a bank this new landscape, and what are you doing to stay ahead of the curve, and how has that approach changed over the past few years? So Raman, why don't we start with you?
Can you hear me? So shall I answer about PSD2 open banking in particular, or are you asking a general question?
In general. So I think looking at, for example, the next few months as we see things going forward with PSD2, how has your strategy changed?
Right. So let me start generally and then talk about PSD2 briefly. I mean, we are in the middle of an open banking debate discussion for HSBC. We've launched an app which is getting a lot of traction, early days, and there's a lot of data governance debate which has stirred up on the back of it. But let me go back and talk about our approach. So I think like many other banks, we are in the middle of what you would call digital transformation. We are spending $1.52 billion globally, and a lot of that is being spent on making our platform much more modern, which is a big challenge, and I think the last speaker alluded to the challenges around legacy, and I caught the end of it around AI. Now, let me follow that train and come back to open banking. I think modern architecture, the hallmark of that would be services, microservices, and the open banking dimension is just one layer on it, which is services that you would want to share with third parties. Now, on that, I think we wholeheartedly embrace it, and we have, in fact, been on the front foot to try and experiment around what an open banking world would look like. So in the innovation sandbox offered by a regulator in the UK, we developed an app called Smart Save, which was the first attempt to, and we partnered with a small fintech player, it was the first attempt to do aggregation for 2,000 odd customers. Now we have launched, ahead of open banking remedies becoming a reality in the UK, an app called HSBC Beta. The name itself is very much emblematic of what we're trying to do here. It's not a finished product. It's launched ahead of what open banking would look like next year, and we are offering it to our customers. And the direction of travel is, we think that HSBC as a trusted brand, which is investing in creating new intuitive customer experiences, can be at the heart of ecosystems that might develop. And I use might as an uncertain phrase here because there's a lot of hoopla around platforms, ecosystems. but I think that it will take time for that to develop. But with our trusted brand, we believe we can play a role in orchestrating that.
Great.
I'll stop here because
perfect,
we have a short panel, but we can discuss.
Thank you. Now, Benoit, I'm curious to hear from you on the same topic, because I know you mentioned at a conference recently that ING, in a way, is almost a 20-year-old fintech. So how do you see yourself positioned at this point now as well?
Yes, this is the arrogant view of ING when we talk to ourselves. Yeah, we're very proud of what we've done 20 years ago, but then in the meantime, we're 20 years old fintech, which is no longer a very young startup, right? So there's also some legacy in there. But the spirit which is behind is staying in the company, right? And we believe that the challenge is not digital, right? And it's launching an app. I think we also launched the same app 1 year ago in beta version here in the UK called Lloyds, which is also quite successful. But this is not the point. The point is transforming your company in the mindset of a startup, right? So we have launched a lot of programs into copying the Spotify model in the way we're working in the Netherlands, right? Having 100 managers being replaced by 12, just working in squads and the way those guys are working. So changing the culture is the only way we can effectively transform ourselves. Because as bank, I think we can say we are ahead, but we're really lagging behind, right? In the way we are doing things, right? So there's the arrogant way, but still we need to also to be realistic and transform ourselves and go much faster in the way we are working. So we have implemented also what we call PACE, which is our own innovation strategy on getting very fast to the market, checking with customers, just copying the way those startups are doing. But it takes time, right? So it's not like the Italians say, between saying things and doing things, there is in the middle the sea, right? So we hear a lot of very good and interesting stories, but now if you're good at the hard facts, we still need time to move. But the other hard fact is that when you talk to fintechs, that we have a huge power of having, in our case, 36 million customers, in your case, much more. But this is a huge power which we can use if we transform ourselves. So we see this more as an opportunity than as a big challenge for us.
Perfect. Great. Good. Kirsty.
I think in context of where banks have operated for the last 5 years, and I think Anthony mentioned it earlier, FinTech is, in a banking context, nothing more at its heart than fundamental cultural change. I say nothing more, that's the biggest thing you have to change. And if you look at it from a regulatory point of view, the last 5+ years have been nothing but defensive. Everyone has been spending nothing on anything except being ready and therefore compliant for whichever regulation has been coming in. So if you put that as the backdrop for then looking at what banks really want to do and really want to change themselves, that's the position that they're in is 5 years plus of defensive operation. The position they want to be is forward-looking, partnering and changing themselves. And so you've got that point in the middle where, and that's I think where we are probably mid now, acknowledgement that we need to do it and legacy of where we've been. And so that mental shift is the biggest one to get over. In my mind, and what I'm seeing is that the FinTech collaborate, challenge, they're all fabulous agitators for us in that they keep us on our toes. So there are multiple angles for a FinTech and a bank working together. We both learn, and we both need to understand how we have to adapt to work in an ecosystem that we want to be relevant, contextually relevant in the next 2, 3, 5+ years. And so that's where we are in our journey at the minute.
Right, perfect. Now, Gustavo, I know you have a slightly different experience because you've essentially almost built a startup within a corporate. So if you could talk a little bit about that perspective as well.
Yeah, sure. So it's true in our case, you were talking about maybe the last 5 years in terms of how FinTech has been sort of more of a thing present in our lives. In our case, we started sort of 10 years ago. So if we use the analogy of a relationship, in that sense, you were talking about being relevant and keeping this relevance as a player in that ecosystem. We started nurturing the ecosystem. We started with the innovation centers, interacting on a daily basis with the entrepreneurs and developers. we have learned a lot, and some of the challenges still remain because we're so different. I mean, big corps and big corporations and fintech and small startups in general. But yes, taking the time and making sure that you have something to add to that ecosystem, it's so important. It's maybe obvious, but it is like that. Being explicit of what is it what you are bringing and what is it what you are expecting from others it's very relevant. In our case, this specific case in particular, I'm not a banker. I joined BBVA back in 2010 to run open innovation and the innovation centers. But the interaction with the thousands of startups through our Open Talent, BBVA Open Talent program made me remind a bit of my previous entrepreneurial activity. And the last year I've been building a business from within BBVA in a startup mode, I would say a real startup mode, with a small team. And we have been building a team from scratch, very small team, and an MVP, and we are out there with a platform, lending platform for SME. I'll be happy to share a bit more. And the whole idea has been to mimic a bit of what startups do out there in terms of being nimble, agile, in terms of being in some way very accurate in finding something specific that really kills a real pain.
Great, thank you, Gilad. Go ahead.
So for Lloyds, I think that the word innovation really is translated to a multi-year, multi-billion investment program that is focused on achieving three major goals. One is to continue developing new customer-centric digital propositions. The second is to continue to transform our customer journeys as they bank with us. And the third is to enhance our digital capabilities, building new capabilities that will allow us to continue meet our customer expectation going forward. We achieve this mainly through the support of an in-house innovation team that is focused on four different activities. One is really to instill a new culture, an innovation culture across the group, literally turning innovation into the business of everyone. The second is to increase awareness to fintechs, to innovation, to tech, to market trends, to open our colleagues' mind into what is happening behind our walls. The third is to provide a safe environment for testing and learning new ideas, new concepts. In a very short cycle, in short cycles in low budgets. And we do about 70 of those experiments per year. And the fourth is to continuously scan the market and look for those fintechs and those techs that could turn into inflection points in our customer journey transformation and business areas. Obviously, there is an inherent conflict between our risk-averse DNA that we developed over 250 years of lending and running a bank to this new world of embrace risk, fail, learn. Okay, so there is a clear tension that we manage. I think that we are doing it well. So we see more and more colleagues, senior colleagues that are engaged and innovating and are ready to take risks and take bets.
Yeah. Great. Thanks, Gilad. I want to pick up a little bit more on this idea of conflict going forward and just dig in a bit deeper here. So EY recently published a FinTech Adoption Index in 2017. It said that 1 in 3 digitally active consumers are now FinTech users, and this is up from 1 in 7 in 2015. And money transfers and payments are very much at the front of that. And according to Deloitte, of course, European banks have been unable to generate returns above their cost of equity since before the global financial crisis. So we've been talking a lot the last 2 days about collaboration, about partnerships, about startups and incumbents coming together. And I would love to actually pick on something because I think, Kirsty, you said something really important about the fact that fintechs can actually serve to also teach the incumbent banks. So what are some of those areas that you've learned from in working with the fintechs, and how do all of you really view these fintechs that are out there as well? So Kirsty, yes, it's back at you.
I shouldn't have said that. So if I take a step back, so Barclays, for those of you who you'll know us on the high street, but what we've been trying to do on the inside is build more of an ecosystem that focuses on the startup. So everything from engaging with our VC community and providing them access to the startups that we engage with through Rise, which is our physical platform in Shoreditch, where we run accelerators and hackathons and provide access for less so the startup, maybe more so the scale-up size organization institutions, where we may not have the perfect partnership situation, but we learn from these guys and girls, she's happy to say, in that they are thinking about problems that we have differently. And what we've started to do much more of, and we have a couple of real-life examples in-house, which I don't have time to talk about now, but our CEO regularly stands up and shares relationships that we have with some of those partners that we've incubated through our Rise accelerator program. That what those teams are able to do is, in partnership with the businesses and the problems they're trying to solve, will bring in a different view, different access to different technologies, and then we come to, which I suspect we'll get to at some point in the conversation, how and when does this not really work, and how do you get over that? Because there are multiple levels. I was talking to someone out on one of the stands before we started today, and their challenge is forever getting through the governance process. So I was 2 years out on my own working for myself with FinTech and data before I came back into the large institution. And for me, 24 hours of not getting a response was killer. And not getting an invoice paid within a week of sending it was like cash flow death. And yet we're back in institutional mindset. A week goes by and I think, oh dear, that didn't really kind of happen as I was expecting it. And so this is also the cultural shift that I'm trying to push when we're on the inside, which is making ourselves ready for those guys to be able to be embraced in a way that they understand and need, because a 7-month governance approval onboarding process is cash flow death for a small business. And so there are many layers to that change that we need to go through that we're working on.
Yes, I couldn't agree more. I think the learning process is immense, right? We just dramatic. And I think the biggest thing which they are teaching us is the value of time, and the euro, right? I think we're still very rich as bank. We are all complaining that we went through crisis, it's terrible, and we have regulations and the whole story behind. But compared to what is happening in real life industry, in retailing, where every single euro has a different value than what we have in banks, right? So there is still a lot to come for ourselves to understand what is this world in real life. And fintechs are helping. We have about 100 partnerships with those fintechs, and they're teaching us this value of time. We're moving a bit from the early stage innovation where we were at the beginning, as we need also to show impact, right? And what we see is that it's nice to have ideas, it's nice to have people thinking differently, but eventually what we need is just to bring something to our millions of customers, right? So this is where the shift we were making, and we'll see also a couple of fintechs who are not able to follow that, right? Because our resources are limited.
Yeah. And actually, Raman, I actually want to pick on you a little bit here, because I know you mentioned to Business Insider a few weeks ago that with regards to the neobanks, the HSBC is also creating things on a very similar level. So do you want to comment just a bit on that as well?
Right. Yeah. So it's a different question from what you posed before. But so let me say, I think so let me start with FinTech, and then within that address the neobank question. So FinTech itself is not a monolith. We use it as a monolith, but it's not. I think on the enterprise SaaS providers, which is bulk of FinTech, banks have been consuming services from those players for a long time, and we are doing that now as well. But I think your question is more about FinTech, customer-facing, competing, and addressing perhaps a customer problem very deeply, with a lot of obsession and with problem solving which is different from what a bank employs, problem solving approach. Our challenge, the way we see it, is to replicate that at scale. And the key question here is at scale, because we've got millions of customers, and how do you set up many, many cross-functional teams who then compete, learn from what fintechs can do effectively, regulatory arbitrage, all those questions aside, because we need to be mindful, thoughtful of how we go to market with those propositions. So that's what we are learning. And I actually joined the bank from a startup. I'm also a non-banker. I joined HSBC 3 years ago, very much part of the London startup scene. And I've seen what great looks like, and that's what we are trying to engender within HSBC. Now, on the neobanks question, neobanks or full challenger banks, I think if you take the UK market where the banks are more active, there's a lot to learn from, again, from that problem-solving approach, how you speak to customers. There's a lot of learning, even when things don't work. In a particular bank's case, how you deal with customers when things are not working, the tone of voice, that's a learning for us. And we are changing that from within. But the market opportunity and who captures value down the road, I think the market is sufficiently large for a few players to flourish and grow. I'm more concerned about threats from other quarters, and especially as a global bank, that would inevitably take the form of big technology that also operates with a global footprint which is not different from ours. On the neobanks front, I think there's a lot we can do at scale, which banks are trying to do. And like any startup, it will come down to execution excellence. Can you scale your unit economics on customer acquisition down the road when early adopters are plateaued? To be seen, and absent omniscience, I think you can't predict. You can create all sorts of scenarios, and who knows, there could be a player that comes up with a 10x better, faster, more intuitive solution, and then there's wholesale customer migration. We don't think so, but we want to be in that world as well. So.
Great. Now, Gilad, I know you come from a varied background as well, so you have an interesting perspective being in Lloyds. And I want to go into this idea of the sticking points and where some of the challenges are, because all of you on the panel here really are, in a way, the internal champions for innovation and for change. So on this point that Kirsty mentions, what are the barriers or the obstacles that you're facing internally?
So again, I've touched the challenge or the inherent conflict of innovation. And I think also there is a perception gap between banks and fintech as to what good looks like. So we see hundreds of fintechs here, across the group, and I think that most fintechs are still very much proposition-led or proposition-focused, and that's okay if you are a B2C business. But if you approach a bank, so you need to think in terms of capabilities. And we are interested in capabilities, not in propositions. And I think that's a major gap. That we're trying to convey and work with the fintech community on shifting the mindset and thinking of how you can help us run this business better, and not how you can help us build the next proposition. Okay, and I think that's a key point for fintechs to understand. The second is the value of time. And I think there is a real challenge, okay? So if I think of sourcing, I gather it's just terrible when, we need to spend 6 or 9 or 12 months in doing a POC and then doing an RFP. And I think that, we need to have these processes. I think that it's clear, okay, from a governance and risk perspective. We are building internally now a new fintech rail, so a new sourcing process that will allow us to partner with fintech much faster in a sustainable way and to delegate those capabilities, those fintech partnerships across the group. It will take time. Not sure we'll complete it before the next landed, but it will happen eventually. And I think that also, if we think of perception of time, and fintech don't understand why it takes so much time, but also, to be fair, okay, we need to understand that when we look at the proposition and want to roll out a proposition for 30 million customers, it takes a very different level of responsibility and governance before we roll it out to roll out a feature for 200 or 2,000 or 20,000 customers. So we live in different worlds, and I think there is some work to be done jointly to bridge those gaps. Okay, but I think that the general direction of travel is definitely fintechs bank partnership, in particular as open banking unfolds. So we'll unfold and we'll understand how open banking look like, but I think that it's given. Within 2, 4, 6 years, that will be the operating model of most banks.
Okay.
Just to build a bit on top of what you're saying and complement that. So in my specific case, when we were building Trust You, this new venture we have built from within BBVA, we have partnered with a few startups, and we are in a way using pieces of different startups to build the whole experience and product. So I think there's enough
capabilities,
enough
not
need,
propositions.
No, propositions and capabilities. So that is why I wanted to complement. So I think there's enough need of innovation in this industry to allow for both startups that are competing with us, startups that can bring some capabilities, startups that can also offer pieces of the proposition you end up delivering to the end user. So I'm not saying that's wrong to focus on one of those. I'm just saying that there's enough space for sort of the whole range. Again, as I was saying, in our case, we have built a platform, SME lending platform, from within in a matter of months, including all the piece of governance with the internal committees and everything. And we have been integrating different pieces of different other players to make sure that we don't rebuild everything, but we use what is out there. And it can be done. We are alive and giving loans to small businesses, so it can be done. And for us, it's been an incredible journey, learning and developing something that is new and is there to disrupt the way we do lending for small businesses.
So we just had a panel on AI, and where do you see the next opportunities for changing the business model inside the bank? Are we looking at things like artificial intelligence, robotics, biometrics? What are the key trends that you see coming out over the next few months or years?
Let me just go fast since we were talking about data, and in this particular case, Trust You, it's a lot about data. It's a lot about new ways to assess risk. So we have built a new risk assessment model for small businesses in the first years of operations. So one thing we have done is we've been using machine learning techniques, and we have been using a whole bunch of data there to enable us to make that risk assessment. So data, it's for me one of and of course machine learning in this case. The technologies around the use of data is going to be massive, and it's going to change our lives and our business, definitely.
So I think that, at least the next 2-3 years is the API economy and the ecosystem play. So how we operate in a connected world and how we play a more significant role in our customer life and businesses through APIs and stronger engagement with their ecosystem. And I think that if we look at distributed ledger and digital identity and other trends or tech trends, so there are many different opportunities and threats that we are looking at and working on.
I think I'm going to be a bit controversial.
Yes. We love that. So.
Yeah, I'm not sure. I'm looking at the world further out than that. I think data and some of the technologies around identity and feel like more of a hygiene factor, and I don't mean to patronize anybody, but what we're doing is augmenting what we do today with new stuff. That's okay, but it's not game-changing. I think there's more interest, in my mind at least, in defining how the bigger picture stuff like IoT is going to change the way that our customers live their lives. And the challenge for us as a financial institution is what's our role in that ecosystem? And I don't think it's what we look like today. I don't have the answer, by the way. If anyone out there does, then please come talk to me because we're thinking about it. But if you look at how things have changed over the last 10 plus years so dramatically, and then you roll forward and take the lid off how we think about things today and let things get a little bit kind of crazy and sci-fi for a moment, what is a bank? And so we're asking ourselves much more fundamental questions around how do we engage with our customers in the world that's 5 years from now, which is probably not much, doesn't look much like the way that it looks today. So I'm going to looking out there rather than augmenting the today.
Building on this, I think I would pretty much agree with AI, fintechs, whatever, all those words are enablers to those things, right? So and I see two things maybe happening is a big, again, cultural move from banks being arrogant centers of knowledge and unavoidable problems into a humble place to be where the customers is really at the center, right? We've been telling this for 20 years, but I think, what is this in reality? And I think the Google, the Amazon of this world are just setting up the scene, and we just have to adapt, right? So moving from this arrogance into a real customer-centric model where we are there to help and eventually happen to be like oxygen, maybe just inexistent, right? We don't see banks, but eventually it's like oxygen. You stop for a while, then after 30 seconds say, maybe it's vital, right? Maybe I need it. So you need those banking things, but you don't want to have it on the way. So how do you transform yourself to face this? I think is one of the key elements. And the second one is also elaborating on what you were saying, the economy moving from a pipeline economy into a platform economy, right? So it's no longer I think about a good product, I build a product, I sell a product, I do the after sales of that product, and I make a margin. But how do I connect all the assets which I have to the ecosystem, which is bringing value to my existing assets, right? So it's a total shift in organization, it's a total shift on thinking and governance of those banking. So I would agree with you that the shift is much bigger in the long term than AI or blockchain.
So maybe one comment, because I'm not sure that within 5 to 10 years we won't realize, or we will realize that actually we are building the Sainsbury's, Tesco's, and Waitrose of the financial services. So between these 4 or 5, we can pick who will be who, yeah? But that's what we're building essentially. So we still own the customer-facing bit of the value chain, but we'll have so many third-party products and services offered through the platform.
So I think my view is similar, but let me start by saying that for the next 3 to 5 years, I think this vision of banking as hyper-personalized set of services for our customers should come to reality. It's fraught with all sorts of data governance, privacy issues, and let's not forget, in a world of even more interconnectedness, not talked about, cybersecurity risks, which will be front and center. But this vision of going back to the future, the halcyon days of banking where you go to a branch, someone knows you, knows that you are on a property ladder, you're expecting a child, that you could replicate at scale with computing power that sits now, the data that sits now. It's not happened. There have been attempts, but we are still in that journey. The open APIs add another complexion to it and an opportunity to it and a challenge. But I think next 3 to 5 years, that should become a reality, despite teething issues, despite data governance issues. It is inevitable. If we have to create value for our customers, it is around that personalization using digital. Now then you can speculate on the technology backbone, which is already there, but serverless architectures, the cost of DevOps will come down even more so, and I think our legacy costs will then drop. Then you can speculate on advancements in quantum computing, AI. I think the back office robotics automation is already, we are in the throes of that. That should be realized. Then would we have a sustainable killer use case of blockchain? Probably, and the pun was completely unintended on the killer use case. And then, and I think then beyond that, who knows? The 5 years is clear. 10 years, we have fuzzy predictions. It's very easy to make those predictions, and I can speculate a lot. It's a waste of time.
Yeah. Good. So we have about 10 minutes left to open to the audience for questions and answers. Does anyone? Don't have any. Is there any questions? No question. Oh. So there's one over here. Sure. Is there a microphone?
Thank you. May I ask a PSD2 question? Since it's coming in January, it's very newsworthy. And my understanding is that the key to its success will be what happens with standardization and how the banks will develop APIs that will enable third parties, fintechs and so forth, to link as seamlessly as possible. My question is it possible that in this standardization process, there may be roadblocks that get set up that will prevent fintechs from connecting as well as they would like, and that this could become a rather thorny issue as PSD2 rolls out over the next couple of years?
Just before we answer that, I know, Raman, you need to leave for an urgent meeting, so thank you so much for joining us. Thank you so much. Thanks. Okay, great.
I'm not sure this will happen, and I think if this happens because a bank is intentionally doing this, I think eventually it will play against itself. The world is opening up, and the EU is really trying to build a world where there is more room for flexibility and interconnection. So there might be some hiccups, right? And it might not be perfect from the beginning, but eventually we'll be living in a world where everybody has a vested interest in being open and getting the data, right? So, yes.
Inshallah.
I wanted to share a bit of an analogy, actually. So I spent 20 years in ivory towers, and then I spent 2 years not. And learning the art of the politics in those 20 years was what, made things viable. And I spent the first 6 months of the 2 years out unlearning that behavior, because if you work with a group of entrepreneurs, the mindset is radically different. In that I felt quite uncomfortable sharing my ideas, because in corporate land you would expect someone to steal it and sell it and badge it as their own. But typically when you're working with a group of people who are out there to solve for stuff because they're out there having fun and working in tech, people would regularly, and I'll paraphrase, but basically the pie's big enough for a piece for all of us. And I think that may be an extreme, one end to the other, but somewhere on that curve is where the operating mode probably needs to sit. And if the response is as you just suggested, that would be disappointing. There will be some natural resistance, there always is, but it shouldn't be with deliberate intent.
So, to your question, I think that PSD2 open banking, at least the regulatory framework, is almost irrelevant for fintechs. Because if you take a close look at the most successful fintechs, most of them aggregate transaction data and do payments and essentially build propositions, quite successful ones, some of them at least, that are doing aggregation and payments. And I don't think that was the intent of the regulators when they took the decision to launch PSD2 open banking. Okay, so I think that the purpose was to increase competition amongst the bigger player and other bigger players that may enter the space. So I really think that from a fintech perspective, it will be beyond compliance. What banks will do beyond compliance to try and harness fintechs as part of this exercise, this, I would say, game theory exercise that we are all experiencing, trying to think what other players will do and which capabilities we need to build.
Great, good. And I think there's another question here.
Hello, my name is Ruben. I was hearing that you think that the fundamental change is deeper than just blockchain. What about platforms? What about those big guys, or the guys who play with that kind of dynamic? What will they be against the incumbent banking structures or systems? Could you comment a bit on that?
Yes, yeah. So I think this is the real, let's say, threat, or this is the real, those are the real guys having the power to impose the rules, right? They are today imposing the rules in consumer behavior, right? So they tell you that instantaneity is absolutely key and important, right? So as banks, we have to behave this way. I'm not sure they want to go into the infrastructure part of banking, which is, not really profitable, but we'll see them as an additional layer, which is being put between the customer and the banks, right? So, and they sort out the information and get the relationship. And I think if we're not able as a bank to build a similar kind of platform, which will certainly be different than the Facebook of this world, but I think build this relationship with the customer, then I think the threat is really big. But what did they do eventually, right? Those guys are building value, they're delivering value to customers, right? So Facebook, it's just because you meet your friends, you get some excitement in there, right? Amazon, you want to buy something, it takes a second, you find everything. So the value is proven there, and this is where you go. And the problem with banks over the last, decades, is that they didn't really care about building concrete value. The business models of banks has been built into how much shall I charge the customer to get my return on equity, right? Provided my cost. While those models are different, how much value can I create and how much can I get from the customer? And if we do not transform as banks going to that model, I think we'll get into real trouble.
I don't have much to add to that, really. I think you said it beautifully.
So I think that is slightly more complicated than that post GDPR and the data protection bill, and I think that the assumption that banks will turn into the custodian of their customer data. So we will hold the customer data safe, and it will change the dynamic and balance of power between GAFAs and banks. So I'm not sure if we won't see new business models that will allow them to access our customer data, obviously subject to customer consent, and without owning a banking license. So I think it's unclear.
So I would add, the person who owns the data is the customer, and actually the ownership of customer data is the customer, and that's a mind shift change again for banking community, because the current thinking, if you talk to many, will be we own the data, and actually that disempowers you to be creative with that, because you give the power is in the customer's hands, and it should be, and that will change our engagement model.
And I also think they're one step ahead in data management and use, and then we have to confess this. So it's not that easy, but if you also look at Google, if you asked 10 years ago, would you trust Google as a party? The minority of people say, yeah, maybe, but I'm not sure about those guys. But if you ask it now, a majority of people say, yeah, Google offered me a loan, yeah, why not, Now Amazon is producing loans to small business, right? And things are getting normal there. So we should not also underestimate the ability of consumers and people to shift their trust into those new players.
Good, so we are almost out of time. So in conclusion, can I ask each of you, we have a lot of startups that are sitting in the audience right now. If I'm a startup, why should I come to collaborate and work and potentially partner with your bank in particular? Anyone can begin. Yeah.
The first one, yeah. Again, we started years ago, and we have shown that we have a true interest in staying close to talent and ideas out there, in doing stuff with that, in doing real stuff with that, in building means to expose and share some of the things we have to empower others to do their own stuff. So that would be.
Thanks, Gustavo.
On our side, yes, on the top of all the advantages which we have, capital, customers, and all those things, we partner today with about 100 fintechs, right? And we also stopped 25 partnerships. So what we try to do is to be fast and frank and honest to partners, right? Not waste the time on the other side. So we're trying things, but if it doesn't work, we'll try to be also very transparent and build a partnership which is valuable on both sides, right?
Thanks.
So we at Barclays are building a multi-level engagement model, and it depends what you need, frankly. So do you need access to capital? Do you need access to business banking? Do you need someone to go try out your product proposition capability with? If it's not us, do we have a network through our VC network and fellow friends or even our corporate clients that are looking for engagement and doing things differently? So for those of you who are London or New York or Mumbai or wherever you might be, you're very welcome either catch me or go and speak to some of the guys who run our Rise sites, where it's your face to market, if you like, from a fintech point of view specifically. But we also are working, we have an initiative called Eagle Labs, for those of you who are not fintech specific, but are looking at doing new things differently, where we're looking at the other side of innovation, and then they're also hosted with us at Rise. So feel free to get in touch, because the more questions you ask, the more you'll discover, and I haven't got enough time up here now to share it all with you.
So I think that fintechs should come to us, mainly because of the size. So the fact we're the largest commercial and retail bank in the UK. And I think that we have a very strategic approach to partnerships. So we think long term, and I think we are a very good partner for the long term for those fintech that can go through the hurdles of sourcing and POCing and so on. So it's mainly the size and the approach to partnerships.
Perfect. Great. Gilad, Gustavo, Kirsty, and Benoit, thank you so much for your time.